Let's get in some more perspective on which way the global equities may be headed. Peter Cardillo, Chief Market Economist at Rockwool Global Capital, joins in. Peter, hi, morning. Appreciate you taking the time out and joining us today. Firstly, a word on the U.S. markets. We've seen the biggest weekly decline come in. The Dow has cracked about almost 1% all of last week. And clearly on account of re-emergence of concerns coming out of the Eurozone, Greece in particular, data out of Germany as well as China. Do you think U.S. markets could drift lower?
No, I don't. I think, we're probably going to see this week the market perhaps make new highs. That is, the S&P could trade as high as 1435. And I think it's going to happen because of two factors. One, it's a very busy week in terms of economic data. Consumers' confidence, personal income, and personal spending, probably the highlights of the week. And of course, we also have end of the quarter, so window dressing. And I think that the market probably is going to work its way higher. Now, we've had some disappointing home news last week, and of course, in most of the home indicators, we saw a decline from the previous readings, but nevertheless, the trend remains quite positive. And I think the economic data this week, most likely the Chicago PMI, is going to indicate that the economy is gaining some momentum, and that's going to be the key before we enter into earnings. And then, of course, there's always that possibility of a slight pullback. But I think we go higher before we go lower.
What about commodities and specifically crude? Because the word on the street until last week was that it's not a demand-led uptick that we're seeing in crude and it will correct. However, the data seems to be improving a little bit. What does crude do in the near term, you think?
There's no question that the crude oil market is carrying a premium, maybe of about $10 to $12 in terms of its price, and that's all based on geopolitical problems. Obviously, Iran in the spotlight in terms of political uncertainties in the Middle East, and I think that the market is certainly being bid higher on the speculative premium bid. But nevertheless, if you look at the global economy, which is probably growing around between 4.25% right now, based on demand, probably oil prices should be somewhere between $90 and $95 a barrel.
Okay, Peter, appreciate you taking the time out and speaking with us today on ET Now.